Going on YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so that my future videos. Finally back. I had to get a new laptop. I'm still trying to fix the sound system. I had to recover a lot of things. What a pain in the butt these past few days. So I promised you over the weekend that I would show you my dividend portfolio and show you a new business development company that I've been buying. So I'm going to show you the changes that I've made to my dividend portfolio. I'm kind of focusing on some of the high yielders. I'm going to go over that with you, and very excited to go over this business development company. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check my dividend portfolio out right now. So I'm going to start from the bottom with my dividend portfolio. I'm going to be going over Triple Point Venture Growth. Okay, that's one that I'm going to be going over. But I just want to show you I have MPLX. I've been putting them at 2%. TPVG, I've been loading up in them. I'm going to go over them. I'm very excited to go over that. Blackstone Secured Lending Fund, BXSL, and I said I was going to add QQQY. I just started throwing money in them. Saratoga Investment Corporation, I've been putting money in them. FSK, I've been starting to put some money in them. Fidus Investment Corp, I've been putting money in them. Hey, look, Hormel Foods, I'm in the positives, which is great. A 94.26% return. So I bought a huge dip, and that's something nice. I'm getting a nice return. Trinity Capital, I'm up 26.65%. That's a business development company. EPRT, Essential Properties Realty Trust. I really like that one. That's going to be my replacement for the Spirit Realty Capital. I'm still surprised at the move, but hey, it's really good for realty income. T Rowe, I've been a little bit down. Wendy's, I'm down. I need to give Wendy's a little bit more attention, so I'll be investing in them a little bit more. I do have them at 2%. Medifast is one that's been taking a big hit. I don't know how sustainable their dividend is going to be in the future, but again, I'm been capitalizing on these dips. Kroger M1 Finance still has me at a distribution of 3%. And Medifast and Kroger, I'm hoping to get in there. GLPI, Gaming and Leisure Properties, this is one I'm excited to buy. Again, I'm back at it with One Main Holdings. They are a very good high yield dividend stock. It appears to show that the dividend is stable. So that's a very nice distribution. Enterprise Product Partners, I've been loading up on them. Truist Financial Corp, I'm at $1,589.41. I'll go over my total shares I have with everybody. CubeSmart, I'm at 3%. Citizens Financial Group, I'm at 3%. Fifth Third Bank Corp, I'm at 3%. National Storage Affiliates, I'm at 3%. NNN REIT, I'm at 3% with my focus. Simon Property Group, I'm at 3%. Starbucks, look at this huge return I've made. I'm up 164.07%. Bank OZK, I'm up 5.98%. US Bank Corp, I'm at 26.17%. Premier Financial Corp, 37.37%. And then Innovative Industrial Properties have been way up there with a huge return. I'm up 2,210.59%, and I'm up $890.51. Hey, capitalized on them, went in. American Tower Corp, I'm up 22.90% since I bought that dip. Pepsi, I'm down 5.76%. That's fine. Vici Properties, I'm up 1.74%. So I want to start buying these. So you notice I have a little bit more focus in the financial sector. And if you're new to my channel, I've been telling you, I've been going after the real estate sector and financial sector with my dividend stocks for a while. Again, I'm a big value investor. My IRA is a different story. I also have FZROX and another brokerage account in Fidelity. So I can worry about growth, in those ETFs somewhere else. This is strictly for dividends. So I am doing pretty well. but I'm not where, and I'm not at the point where I want to be yet. So I'm going to jump to how many shares I own in each of these stocks or ETFs that I own. So right now I'm going to reveal to you my stocks. I'll go over TSLY and NVDY in the future once I receive distribution of them and how things are looking. So Regions Financial Corp, I've lost $384. I've been down 21.54%. Big deal. That's going to fix itself. Premier Financial Corp, I'm at 86 shares. ARK, Ares Capital Corporation, I'm at 82 shares. Now with ARK, if I can get to 200 shares, 200 or 400 shares, I think that's going to be the sweet spot, is 400 shares. So I'm going after some of these business development companies, the high yielders, the slow dividend growth, as well as the dividend growth stocks, in the very high dividend growth, the ones that are very solid, like Starbucks. So Trinity, 81 shares. Barings BDC, 73. Flowers, I'm at 71 shares. Vici Properties, I'm at 69 shares. Wendy's, I'm at 68 shares. Capital Southwest Corporation, I'm at 68 shares. Fifth Third Bank Corp, I'm at 61 shares. Citizens Financial Group, I'm at 60 shares. Hercules Capital, I'm at 59 shares. So you notice I need to go after these bad boys. Blue Owl Capital Corp, I'm at 58 shares. Enterprise Product Partners, I'm at 58 shares. Ally, I'm at 56 shares. Bank of America, I'm at 53 shares. Jackson Financial, I'm at 53 shares. And Essential Properties, I'm at 51 shares already. So I've been loading up on them. Truist Financial Corp, I'm at 51 shares. National Storage Affiliates, I'm at 49 shares. U.S. Bank Corp, I'm at 47 shares. Brightspire Capital, I'm at 47.94 shares, so I'm almost at 50 shares, which is exciting. And in mREIT, I'm at 41 shares. Bank OZK, I'm at 41. Fidus Investment Corp, I'm a little bit down. That's fine. I'm at 41 shares. CubeSmart, and I'm at 41 shares. OneMain Financial, again, I went up 7.71% since I bought them, which is nice. Sixth Street Specialty Lending, I'm up 4.83%. Kroger, I'm a little bit down. That's fine. They're going to fix themselves eventually. Kilroy Realty, I'm a little bit down. Big deal. Gaming and leisure properties, again, the real estate sector and financial sector have been taking a big hit. And a lot of these financial sector stocks are in SPHD, which is nice. So Rhythm Capital Corp, I'm at up 14.15%. That's one I need to focus on as well. Alpine Income Properties Trust, that's one that's been doing pretty well. FSK, I'm up 4.98%. Again, 31 shares, that's not enough. Hormel Foods, 29 shares, that's not enough. Triple Point, TPVG, we're going to be going over that. QQQY, I'm at 24.66 shares. Not enough. I need to get to about 400 with QQQY until I start really doing some damage. Tyson Foods, 23.92 shares. Innovative Industrial Properties, again, recent updates. I'm down 8.57%. So this is my unrealized gain. Like since I got them, I bought the dip and then I did this. So it looks like it's like going crazy. Medifast is one that got a huge hit. So it's crazy because it shows I got to gain my overall since I bought and sold them and going back and forth with tax loss harvesting. Corning, I'm down 16.23%. Ouch. Saratoga Investment Corp, barely up there. Reefy, Chicago Atlantic Real Estate, I rebought them. I'm up 7.38%. The shipping companies, Diana Shipping, I'm up 44.89%. Getty Realty, have been down. Starbucks, I'm at 6.23%. CareTrust REIT, I'm at 21.87%. McCormick's been taking a hit. Simon Property, I'm at 13 shares. Omega Health Investors, I'm at 12 shares. Prudential, 11. Agree Realty Corp, 9. That's unacceptable. MPLX, again, I've been focusing on them. SFL Corporation, Coca-Cola, WP Carey. Coke, I'm at 8. WP Carey at 7. Energy Transfer, I rebought them. And One Oak, I rebought them. So I'm very excited to start re-adding One Oak and starting to generate a lot of passive income because they just acquired, I think it was MMP, So they're starting to get a lot bigger and stronger. It kind of reminds me of and the pipeline stocks of Realty Income, the way they just suck things up and just get bigger and stronger. So very excited. But I want to go over TPVG. So this is one exciting business development company that I bought, and I want to go over them. So this is one I've been capitalizing, Triple Point Venture Growth BDC Corp. They're sitting at 1053. In the past 5 years, they have not done well against the S&P. They have a high dividend yield, so you have to be very careful with business development companies when you put money in. And I think I do need to fix the sound, so hey, give me some time. I'll fix that eventually. So this is what's exciting is they're cheap, they're down. They were actually beating the S&P for a while, and then boom, took a hit. They're still trying to recover. So we're going to go over them right now. So going on their website, they're an externally managed, closed-ended, non-diversified management investment company regulated as a business development company under the Investment Company Act of 1940. They were formed to expand venture growth stage business segment of Triple Point Capital LLC. Their sponsor is part of their investment platform and will be the primary vehicle through which it focuses its venture growth stage business. Their investment strategy, their investment objective is to maximize their total return to stockholders primarily in the form of income and to a lesser extent capital appreciation. We pursue the objective by relying on a core investment philosophy described as the 4 R's: relationship, reputation, references, and returns. So let's go a little bit more into them. So here's their investment strategy: to provide financing primarily to venture capital-backed companies at the venture growth stage. They target companies backed by a select group of lending venture capital investors. Focuses on technology, life sciences, and other high-growth industries. They're externally managed by their advisor, which is a wholly owned subsidiary of Triple Point Capital, the leading financing partner to venture capital-backed companies across all stages of development. Benefits from Triple Point Capital's strong brand name, reputation, track record, industry relationships, and direct organization's capabilities. Their investment objective is to generate current income with preservation of capital, along with potential for additional return through equity kickers, end quote, kickers, in the form of warrants. They invest primarily in secured growth capital loans and targeted returns between 10% and 18%. So right here, okay, their shareholder friendly fee structure and alignment, 1.75% management fee, 8% annualized hurdle rate for income incentive fee, total return requirement whereby incentive fees are capped 20% of cumulative pre-incentive fee net income looking back to it since their IPO date. So let's look at a few more things. So I took a screenshot of their revenue trends. This is on macro trends. So I just wanted to show you this. This is annually in millions US dollars. 2016, 43.635. 2017, 51.51 or $51.51. 2018, $64.64. So here's their revenue. So here's their financial statements. I took a screenshot real quick because I can't really do a touchscreen on here, which is kind of crazy. So revenue annually in millions US dollars, 2016, 43.63 or $43.63. I'm not going to round it. 2017, $51.51. 2018, $64.64. 2019, $73.38. 2020, $91.18. 2021, $87.39. Again, annually in millions US dollars. Okay. 2022, $119.42. So this is annual data. So you're seeing a huge increase in 2016, $43.63 annual millions US dollars to 2022, $119.42. So that's a huge increase in revenue. Now I'm going to jump to their dividend history. Now look at the dividend history. Right here, 2014, it was 32 cents, and then it was 36 cents. And then it just cracked 40 cents. So this is one thing that's really nice, is they cracked 40 cents. So the dividend growth in 5 years is 1.74%. Big deal. Now, the thing with the business development company is 90% of what they make go back to investors. That's why I started looking into them. I'm not worried about their payout ratio. Again, they're a business development company. 90% of what they make have to go back to investors. Okay, that's the same thing as a real estate investment trust. Their dividend is 15.58%. If you bought one share, you made 160. But they are starting to hike their dividend, and that's one thing that excites me, as well as the revenue going up. And again, they are a cheap dividend stock, so I'm all over it right now. Now, again, that's a risk, but it's a risk I'll take. So trying to get used to all this new laptop and everything, so bear with me. Trying to get used to the sound and everything as well. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos, and I will jump to my disclaimer. Take care. As a reminder, this is a disclaimer. Do not use this YouTube channel in any form of financial advice. I am not a financial advisor. I am not certified to give financial advice. It is best to seek advice from a financial advisor or somebody certified to give financial advice. Investing is a huge risk, and the problem with that is you have to do your due diligence. You can gain a lot of money, you can lose a lot of money. So I just want to be very transparent with that. Take care and have a great Tuesday.